All right, everybody, what's going on? So I'm going to answer some of these questions you had. I'm going to do this from time to time. It's a bit more organized. I'll set a deadline. You'll post a question or two. And this way, your question could potentially benefit someone else's. It's a little bit easier than keeping track of questions and trying to answer them across multiple threads on different posts. So I think we'll do this once a week. Starting with your questions, well, before that, rather, I'm just going to remind everyone we have a trading workshop this Wednesday. It's going to be the first part of our trading workshop series. I'm going to post something in regards to that within the next few hours, especially if anyone is new to the platform on a daily basis. We have new community members. I just want to keep everyone up to date. So, starting with your questions, okay, some of you asked a few questions, and I just have to say that I appreciate your boldness, but we will be answering some of the more in-depth questions in the trading workshop. So I'll touch on the questions that you asked if they get hyper-specific or if they are just say a little bit longer than some of the other questions. But just keep in mind that I will be answering these in the workshop no matter what. So starting with Dave P. Okay, how's it going, Dave? So really would like some information about process order use when you're making decisions about a trade. Where do you start, what follows, and what kind of data and confirmation do you need to see in order to enter a trade? So this is one of the questions that is going to primarily going to be a topic of interest in the trading workshop, but for the purpose of starting it off, okay, when I'm looking at the market, I need to immediately be able to identify what type of market environment we are in. So Bitcoin is an awesome trend following asset, but it doesn't always trend, right? It's either trending or it's ranging. Okay, you might consider it called ranging conditions or bracketed conditions, but it's just periods in which the market is not currently trending, or if it is trending, you'd be considering it a sideways trend. So most markets actually move sideways the majority of the time. Okay, there are breakouts that take us to new levels, and then we ultimately we consolidate. Right, we form some type of balance between buyers and sellers before ultimately choosing a new place to either break upward to do the same or downward to and do the same as well. So immediately when I look at the chart, I need to be able to identify who's in control, okay, what type of conditions we're in. So I'm a higher time frame trader. I'll trade anywhere from the 1 hour up. Some traders might consider the 1 hour not higher time frame, but I'm not really a scalper by any means. I do take trades sometimes when they present themselves, when I have the time to, but scalping requires a certain degree of commitment to just being at the computer. And this is not something that I think really suits my personality, and you have to find a trading style that works for you. So, especially since scalping, really, you are limited in terms of scale when swing trading and position trading and higher time frame trading. This allows you to put on a more substantial position overall. So I look at the market. I need to identify what kind of condition we're in. I want to be able to identify what the context is. Okay, who's in control? All right, where's the path of least resistance? Okay, which way is the market trying to go, and is it doing a good job of attempting to travel in that direction? So at any point, if you have access to the Kenner and Clark indicator, you'll see that the bars are green or red. All right, this is a simple method that I've given you guys to identify when the price action is above something like the 20 period MA, which by many would be considered the line in the sand for whether or not buyers or sellers are in control across any time frame. You can use this on the 5-minute, you can use this on the 4 hour, you can use this on the weekly. Okay, this would be your center Bollinger line, right? So if we're talking about looking at Bollinger Bands, that center line that runs through it, that would be your 20 period MA. Okay, so the most important things to me are price and volume, though, overall. So how much was transacted for, all right, and at what price. Okay, now time is an important factor as well, but I saw someone mention TPO charts. I do not use time price opportunity charts. I use footprint charts. Okay, time price opportunity charts I think are better for markets that have daily opens and daily closes. Okay, I would assume that this is less effective, or I'm not assuming, rather, I do not use it for crypto because crypto is a 24/7 market. I use something like session profile or volume profile along with footprint charts. So again, what does this touch on? This touches on how much was transacted at particular areas. I want to see where buyers and sellers were most interested. Now, as I've mentioned before, most of my trading comes down to being able to identify where we are within the auctioning environment. And again, this is something that we'll go over in the workshop. But if at any point you want to identify where buyers are in control or where sellers are in control, put on the Clark indicator. Okay, the bar setting is such that the red shows when the sellers are in control, the green shows when buyers are in control. Okay, so confirmation, just to touch on that real quick. Consider confirmation like, it's an important thing, right? But at some point, confirmation means that you are essentially giving up a portion of the trade to have more proof. Okay, so the more confirmation you look for, okay, in terms of price action, the more you are giving up in the direction of the trade that you are looking to take advantage of. So the types of confirmation that I'm looking for are going to be a little bit more contextual. Okay, they're going to be based on not exactly price moving to a certain level necessarily, but price maybe not moving to a certain level. So at particular areas where I'm trying to identify, as I've said before, where let's say we had up here, okay, so up here, for example, price was for the most part moving sideways, it's drifting off sideways. What we saw though in the order flow was that buyers were aggressively lifting the offer, trying to push this upward. Okay, so that wasn't necessarily confirmation that the price was still moving sideways, but it was enough for me to identify that the heavier hand, again, was likely above this point right here, absorbing any type of buying power. And that was the type of confirmation that I look for. Now, when other people refer to confirmation, they might say that they require to see this, okay, and then see some type of breakdown, okay? But for example, you can get a breakdown like you did right here, and then you could place a short on this weakness and then have price move up the way it did violently, only to be taken out. So what I'll try to identify is where this occurs as soon as possible, all right, keeping in context the overall market, all right, so for example, this entire structure that I assumed was going to break down, period, so I see this weakness, that's the confirmation that I'm looking for. And like I said, some traders will look for confirmation where, for example, they'll see a level break, and then the trade is a little bit safer at this point, but again, you've given up some of the reward, and if we're just considering risk-reward profile, we want to be able to have as high of an R multiple, all right, and as high of an expectancy as possible. So just to touch on your question, as I said, though, I'll be answering this in more detail in the trading workshop. So I start on the higher time frame, though. I forgot if I said that. So I start on the higher time frame, and then I'll break it down to the 4 hour, okay, and then the 1 hour. You're taking a bird's eye view of the market, but you have to keep in mind when I talk about who's in control, okay, when I talk about the auctioning process, which we're going to get into, there are people that can be interested on the higher time frame and on the lower time frame in buying, for example, but they could be motivated for different reasons. They can have different intentions, and they can have different targets, right? So depending on what time frame also, we have to take this into consideration. And this is just another variable that we need to end up weighing. But like I said, we're going to get into that within the workshop. So next question, Ved. So how to predict short and long-term move with higher accuracy based on open interest, funding rate, and current price action. So as I've mentioned before, all right, and if you look up open interest, you'll see that open interest is not just longs, okay, it's not just shorts, it's a combination of all the contracts, okay, all outstanding contracts. So there are times with certain level of certainty we can act in assuming that, say, for example, longs are beginning to open up aggressively, okay, instead of just longs and shorts, and this being responsible for a rise in open interest, for example. Something that might support this would be, again, paying attention to the order flow. So if we're looking at something like we're going to get into the tensor chart footprint or the exocharts footprint, if we're paying attention to the tape and we see that all aggressive order flows to the upside, if we see that open interest is rising along with the funding rate, okay, this can give us an indication or inclination rather that a majority of the open interest that we're seeing is as a result of the amount of longs that we see stacking up on something like the derivatives platform such as BitMEX. So this is BitMEX right here that we're looking at on tensor charts, and we could see periods where, for example, the open interest is rising and the funding rate is rising along with that. And just to keep in mind how that exchange works, the funding rate does give us an insight into where the dominant side of the market is positioned on that particular exchange. So when using volume profile, session volume profile on TradingView, how many session volumes with your extended lines for value areas, highs, lows, points of control would stay active on your chart at any given time, provide the most useful information. So when it comes to session profile and session volume, okay, we have to keep in mind that session will have different definitions in different markets. Okay, for traditional markets, your session would be your day, right? So if you put a session profile on Bitcoin, it's going to show you the session breakdown of the current day. So if I go on to session volume profile, okay, volume profile, where are you? Volume profile, session volume, here we go. So now I'm on the 4-hour setting. Okay, this will take a second to load. So you don't see any of the session profiles on the daily right now. Okay, you see where the point of control is as indicated by the red line. Okay, but now if we go on to the 4-hour, all right, we'll see the day broken down. Okay, and as you can see, it's going to show you the volume profile for this session based on this daily. Okay, but for me, what I'm doing is I'm typically going to be paying attention to, for example, a larger range, okay, or larger rotations. And then what I will do is I'll take the profile of that range. Okay, let's say that currently, we are outside of this range right here. Okay, if this would load, that'd be fantastic. Okay, we're outside of this range. All right, let's include this bottom. Okay, now that we've come outside of this range, I'm looking at this range in entirety to determine where the important areas might be based on this range's volume profile. Okay, so I'm not going to necessarily keep a ton of session volume profiles open. What I would do if I was, opening up multiple session volume profiles is I would start to try to find areas of confluence. Let's say, for example, we had, I'll just open up another one right now. We'll open up one right here. Okay, so the fixed range for this portion. Okay, and then we're going to try to do is find where the areas were confluent between, something like point of control and a value area. And, based on these two, you can see, yeah, the value area is the same. The point of control is different, though. But what we would try to do is find out rather where areas line up. Okay, where across multiple timelines the value area lines up to see, where a majority of the trading volume took place. Okay, where what was the boundary in which buyers were no longer interested and where sellers are no longer interested in selling. Okay, whether it was the low or the high of the value area. Okay, and then again, if we have multiple points of control lining up, so if we have a range and we're looking on the lower time frame, so if we're just looking at this, for example, I can take the entire fixed range of this structure, all right, and then I'll put the I'll put the point of control on it right here. Okay, so excuse me, 1 second. Okay, so point of control is right there, and then, excuse me, again, need to become more proficient at using TradingView. So then I'll take the profile here, profile here, profile here, profile here. Okay, now again, you can see, what areas line up the most. Okay, if we looked at this as an evolving profile, we'd see that it dipped, but then we're back up here, right? So this area has the most confluence. Okay, it was important up here. This was where the most volume was traded. It came down here, but then again, it lines up over here. So if we were looking at this from the higher time frame, say price broke above this level, okay, the value area would be the high of all these value areas likely, okay, and then the point of control would be right around here. So I would look at this from a higher time frame view as the cumulative effect or the aggregate of all of the micro ranges within adding up and being confluent in certain areas rather than being spread apart. And you'll see that this is the case with larger ranges that after the range is painted, obviously, if you put the entire volume profile or the session profile for that fixed session or that fixed area rather, it will match the microsections underneath it. Now, more questions. Okay, let's see. When using volume profile, how many set? Okay, got that, sorry. It'd be great if you could share which preferred indicators and how you use these in analysis before order. Okay, so with trading Bitcoin, I am not really using indicators when we are in conditions like we are right now. Okay, some traders might use RSI, okay, to find the potential exhaustive highs or exhaustive lows where momentum stalls within a range. Okay, I use the funding rate. So again, I've mentioned why I use this before, and then I use footprint charts, okay, to identify where aggressive buyers and sellers are in the market. Where potentially price might break out of a range, okay, based on who's in control for the entire range. Again, trying to identify areas where there is a divergence between aggressive order flow and passive order flow. When we're trading ranging markets, though, a simple moving average will work. Okay, most people are bored of this though because it's just not active enough, and that just goes to show you that people are funny, right? Because they could identify that something is highly profitable, but just because it doesn't have enough trades, they won't use it. They would rather trade more actively, even if it meant it was detrimental to their performance. But I keep these on my platform, the moving averages, such as the 20, 50, 100, 200. I will put on EMAs. I'll change it up. I just try not to keep too many on. The volatility stop is something that I'll use when we're in a clear trend. This is it's basically an indicator that it's based on a multiple of the current ATR. So this is good for using a stop during a trending period because it gives price the adequate amount of room to breathe. What else? The alpha trend, that's the one that I created. And then the Kenner and Clark indicator, that's another one that you guys all have access to. And then I'm just looking at volume and again, the funding rate. Now, if I'm trading alts though, I'll take out that template. Okay, the alt setup is a bit different. Okay, I'll use something like RSI and on-balance volume. And this is again to find where divergence is between momentum and on-balance volume are with overall price action. And this is primarily looking on the higher time frame. There are traders who use this on the 15-minute, okay, to identify divergences on the 15-minute, for example. If you want to just, let's see if we could just find one right now. All right, so this would be considered a divergence right here. Okay, on the 15-minute, we have two peaks. One's a little bit higher than the other, but right here we have a lower peak. All right, again, not the most reliable by any means. Okay, this is a bit more reliable over here. Moving up, 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 moving down, down, down. Okay, momentum is beginning to taper off. This is something that you can still see with just market structure, okay, with the naked eye, but these are the two tools I would use for alts. Now, some traders use moving averages as well, okay, so higher time frame moving averages. If we were looking at, for example, if I just go into some alts right now, Binance, what should we look at? How about, what's a really crappy one? Let's go into Nano. I'm not sure if this is a bad one right now. This is probably a good one of all things. Let's see. Let's find one that looks like it's been in a prolonged downtrend. Qtum, maybe. No. No, these are all popping right now. Come on, come on. Where are we? I know ZIL has to be horrible. Okay, this is on a weekly. Okay, some traders might look at something like a 20, okay, on the 2-day or the daily, all right, to identify that the momentum is shifted, okay, and I talked about in the video we just did, it talked about divergences in RSI, so if you look here on the 2-day, price is moving up, okay, or rather, price was moving down, okay, this is a better example right here, low, low, but right here we have an RSI divergence, we have an on-balance volume divergence, and as another confirmation, we have just crossed one of the longer moving averages to indicate the trend to the upside. So these are some of the simple indicators that I will refer to time, but for the most part, I'm not paying attention to too many indicators. I have used them before. Okay, there are times when I'll throw an RSI in the chart, but for the most part, I just try to keep it simple, price and volume. So that doesn't mean anything about whether or not you should use indicators. Okay, you can make a profitable system using any indicator, all right, as long as you stay consistent. So I've seen reference the word algo in post. Does this refer to TradingView indicators? Also for new members, maybe quick entry indicators, okay. So algo, all right, so an algo, that's just an algorithmic or automated trading system. So basically a system that is programmed to either enter or exit based on certain conditions being met, and you could get real fancy with these conditions, or they could be simple. It could be, based on price being above a certain moving average and the RSI being a certain value. It could be based on, price doing such and such action over some course of time. Okay, it's non-discretionary. All right, it takes complete emotion out of the process. Very cold, calculated way of trading. Like I said, robotic and systematic. This is great at times, okay, and less useful at others. What you'll find is that most traders are discretionary traders because they want to get their hands into the process, sometimes to their detriment. But yeah, so that's an algo, right? It's a programmed way of trading. Now for members, the indicators. Okay, so on Blockroot's platform, we have roadmaps on indicators. With regards to time frames, higher time frame, the better. So you have to imagine the higher time frame candle has more price data in it. It's a little bit more substantial in the weight that it carries. So with regards to trading using indicators, I'd say using them on the higher time frames is a bit more useful to identify or gauge the higher time frame trend. Okay, but again, there are traders who use them on the lower time frames, right, to scalp around or take advantage of small little trends that might occur within ranges. I've seen it all, right? So it's not so much about the types of indicators you use or on what time frames. It's just a matter of knowing when and where to use them. And becoming proficient with them involves a lot of practice, obviously, and familiarization. So a touch on market and trading psychology. This is most important, especially if you're discretionary, your decision-making process, your ability to stay emotionless, okay, basically stay disciplined, right, to not FOMO in, okay, not act based on greed or fear. You're trying to almost become as robotic in your process as you can if you're a discretionary trader. That's what the efforts in improving trading psychology ultimately work toward. It's becoming more systematic, right? So, not allowing yourself to be swayed by your emotions. There's plenty of books you can read that have nothing to do with trading that can really help you with this. Something like Thinking Fast and Slow. Okay, Brett Steenberger wrote a great book on trading psychology. I can't think about it right now what the title of it is, but pretty much anything that involves behavioral psychology, the decision-making process, right? How we act, okay? What cognitive biases we act on behalf of. Learning anything about this type of stuff um, can really help you improve your overall trading results. Trading environment being fundamentally and operationally different. Not sure what you mean with that. I kind of have an idea, but I'm going to need you to elaborate on that. Start with the basics and actual trade. So Ken hit me up with 5 questions with subparts of each, and I'm definitely going to answer most of this stuff in the workshop, but just to touch on them briefly. TradingView setup. So I keep my setup simple, as I mentioned. TradingView is what I'm doing when I'm using TradingView to basically just mark up charts. The process of using TradingView to mark up charts is much easier than using anything else, in my opinion. I'm familiar with it at this point. I like the way the interface looks. Definitely ease of use. So it's pretty clean, right? So I'm trading Bitcoin primarily in regards to cryptocurrencies. So my setup is such that I think someone else asked this question in this as well about maybe the what's it called, watch list. But I am, pretty much I have just the basic indicators, some higher time frame moving averages. Okay, I have the proprietary indicators we created. All right, I have a volatility stop that's useful, especially when we're in a trending market. This is very useful because it integrates. It's a stop or you could consider it a moving average essentially based on a multiple of current ATR. So if I apply this right now, and I put it, so if it's on this form right now, you'll see that it's shown up as dots. But if I put it onto the line, or I make it a line rather, what you'll see is that this looks like a moving average, right? Except that it's basically based on the multiple setting that you have. Okay, multiple being whether it's 2 or 3. It's going to take the current ATR for this period, all right, based on, again, a moving average setting for this as well. All right, it's going to take the current ATR of that period and then multiply it by whatever value you choose. Okay, some traders will take a multiplier of 2 or 1.5. And what this basically is that if the if the ATR of the current period setting is, let's say it's 50, okay, then everything that's 50, all right, within a 50 range of 50 is going to be, or even one standard deviation out of 50 is going to be considered, pretty much the norm, right? So what we want to look for is areas where price behaves completely outside of, right, what is expected, okay, or outside of the norm or outside the normal standard deviation. And in this case, using a multiple, right, of that allows us to potentially see where the trend is shifting. So the volatility stop takes the ATR, multiplies it in this case by 2, and plots this line based on that. So what we see is it allows us to stay in a trend before ever being really stopped out because of noise. And what I mean is that you are still going to be in the uptrend, all right, even when price jerks around, because again, the jerking around of the price in this manner does not fall outside of what is considered the norm for this previous price action or the current ATR based on this setting. So that's a volatility stop, and it's a great tool to use. Absolutely a great tool to use. It allows you to become a bit more systematic, all right, or robotic when the market is trending. You plop this on, it's okay, I'm entered in now. I'm not going to get out of this trending market until we cross over this and we do something again outside of expectations. Otherwise, you're in a trending market and you're selling and buying and selling and buying and selling and buying based on nothing but fear. So, or fear and greed. So the market pulls back, you're afraid, pulls away again, you want to jump in, there's no process. So TV alerts, okay. So TV alerts is simple, right? So if you're trading based on structures, you just click on this over here, add an alert, and when price crosses through a level, it'll basically send it to your phone or to your email, depending on what setting you have on TradingView. Let's see, what symbols do you track? So I do track that. So I do track, if we're looking at, I go to Bitcoin. If we're looking at what I track right now, we have dominance, but I have the CME futures. Okay, I primarily though track one spot market and one futures exchange, and in this case, I'm tracking BitMEX's market. Okay, with regards to the perps, and the spot exchange I track is Coinbase. So I track BitMEX, even though I don't trade on BitMEX. All right, I trade on a better derivatives platform. I track BitMEX because it has the most volume. All right, that'll probably change very soon, but because it has the most volume and most people trading on it, is the most accurate representation of price on a derivatives platform and potentially where price could be going, because sometimes that leads the market with certain moves. And then I look at a spot exchange like Coinbase. All right. Because at any time I want to see what the basis is between the futures price or the spot price. And I don't know why I said futures price in slow motion. But so I'm looking at Coinbase for the most part and BitMEX. I'm not really tracking the CME. I do look at it from time to time, but it's a more thinly traded market than the actual crypto derivatives platform that's non-KYC and is based out of say Chili's or say Killies or whatever it's called. So that's that. XO Tensor, I'm going to talk about that in the workshop Morning Flow. So I've mentioned this before. I reference Tensor, I reference XO. I reference Tensor because it does have a good graph of the rolling rate of the funding rate, rather of the predicted funding rate, not just the current funding rate. I look at a premium index, I look at that, and then you can also see the open interest. Nicely, you can see that on Tensor as well. I like the interface with looking at those two pieces of information. With XO, that's the one I recommend that you use if you're trying to look for a awesome, affordable footprints platform and you don't want to use Sierra. I think XO actually is they're adding things now that are, I think, blowing Sierra out of the water. Sierra is great if you want to, access a platform that has that charting tool and that access to actually trading, the access to the exchange. But typically I have a TradingView chart open. I have the XO chart. The thing about Sierra is, you can look at the footprints and you could draw on the chart as well. XO, I can't find any kind of drawing tools. And then, the best derivatives platform, I have that open on my screen, obviously, with the Coinbase Pro page as well. But my morning flow, so typical morning flow, I'm paying attention to traditional markets. I'm paying attention to Bitcoin. If you mean morning flow, like what do I do right when I wake up? Or if you mean, how I go about setting up for the day, well, just ask me that in a message, and I'm not sure what you mean by actual morning flow, because you have one pointing to the next. I'm not sure if you mean if you go from one to the next. If we're looking at my setup right now, we're looking at 3 screens right now with 3 of those things plus a 4th open at any given time. As well as looking at, I will look at some of these newer platforms to see whether they are relevant in terms of their accuracy. Like I'll look at the new VC depth. I'm constantly trying to look at some of the newer platforms that these creators are coming up with, because that's what the space is really spitting out right now. Everyone is trying to create the new ultimate trading platform with regards to order flow data, okay, or with regards to any trading data. And I'm constantly trying to sample them out and see how they feel. It's a bit different than traditional markets in that regard. So an actual example of going through charts, executing your trade, go over that in the workshop. Okay, using limit orders, go over that in the workshop. Using triggers, workshop. I've actually gone over these already in another video. I don't know if you haven't seen all the videos yet, Ken, but I've actually gone over all of these. Long and short scenarios, specifically, we'll go over that in the workshop. Yeah, so most of the stuff we're just going to go over in the workshop. But, if you ever have any specific question, you could make sure you check the other videos too, because I've gone over those. But the purpose of the workshop is to catch everybody up, right? So how about how to use TPOs on Tensor, preferably XO charts, role of relevance, reliability, poor highs, what is the best way to manage a trade? Okay, so that is going to be good for the workshop. Let's see. Oh, so TPOs, I can answer that. So time price opportunity. Those are not the same as footprint charts. So time price opportunity are different. Those are going to be the charts with the A, B, C, D, E, F, G, all those letters. Basically, each letter is a half-hour increment, and TPO charts are a little bit more effective and useful where volume profile charts are not, and that's in traditional markets that have an open and a close. Because if you're using a volume profile chart in a traditional market that has, like, you're trading, let's say you're trading equities, for example, and if you're using a volume profile chart, you could see that at times an open will create a massive outlier effect with the volume because, say something, there's a crazy open high volume and that throws off the rest of the day. And really that's not something that might not be worth paying attention to. Whereas a TPO chart is not going to show that type of aberration. It's going to show how long price spent at a certain area, not how much buying and selling occurred at a certain area. So TPO charts are what are going to have, or TPO or market profile, put it that way, are what are going to have your poor highs and poor lows. And this is in regards to the tails of the distribution. So I'm pretty sure that I don't know if anyone is familiar with this right now, but we'll go over this in the workshop in more detail. But I don't think Tensor has a TPO chart. If it does, then I haven't seen it. But you can find TPO charts on Go Charting. I think that's available on, you could go onto their Twitter. I'm pretty sure it's Go Charting. I'll share it in the link. Trade management, we'll go over that in the workshop. But really quickly on that, what other ways of trade management are there? Basically, not just stop losses, that takes us out of a trade, but setting limits. So personal loss limits, for example, you have to have certain periods where you're just like, okay, I got to walk away from the market, right? So if your system says that you are expected, say you have a certain system that has a strike rate of 30%, and your strike rate for 30%, I think the cluster of losses you can expect is maybe 6 to 7. Say you have 10 losses in a row, I would say step away, right? Even though if you're thinking statistically, you might be expecting your next win soon, right? If you're just out of your if you're out of your rhythm, right, and you're starting to trade more emotionally, you have to have a point in which you cut yourself off and step away. The same way that on a trading floor, there'll be a risk officer or a risk management person basically observing everyone's trading and making sure that they are not either taking on too much risk or whether or not they've had a certain amount of drawdown and they are to be limited at that point. You have to be your own police, right? So on a smaller time frame, 1 to 4 hours, how to detect trend change, what are the best indicators to look at, volume profile. So on the smaller time frame trend change, you could use that. It depends on what type of trend, right? Really short-term trends, you want to use a 7 and a 14, or if you want to just identify when the market is, as I mentioned before, you could identify this based on the Clark indicator if you're looking at something like reference to the 20-period moving average. This depends, though. This is all, you could identify this using multiple types of moving averages, right? There's no special pair that is any better than the others. There are ones that have higher expectancies, right? So the alpha trend that I shared has one of the highest expectancies of any trend-based system. Okay, so this is a system that does combine certain moving averages. Okay, how do I determine advance the best bid or ask prices? So this is going to be something specific that we go into in the workshop. I can see it. This can just go into detail right here. Again, all right, how can we best play the current situation BTC currently finds itself in with the aim of riding along with the greater price movement? So again, I said I'm not going to go over price targets or specific trades, but as I mentioned, this is a point in which we have been range bound, and I would say that there is a more asymmetric trade to the upside. So if we break upwards, I think that has much farther to go, or rather that has the potential to go much farther than if we break to the downside. When we break to the downside, there is the possibility that we do take advantage of a range break, and then we hit into 8,700 and then completely just rip upwards again. So these have to be taken into consideration. Again, though, I'm not going to get into any specific trades in this video. Hawk. So any strategies to manage trades would that be? So yeah, there's definitely ways to do this. You could filter your trades and then you could set up indicators. Not indicators. You could set up alerts. So alerts meaning, you don't have time to monitor everything, but if you're looking for certain setups and, certain setups are contingent on price being in one area or another, set an alert. Bracket the trade in alerts. Basically, if we're looking at potential longs, right? So we're looking at a potential long. In this case, it'll probably get away from you, but the downside one might not get away from you. So let's just, for example, say I set an alert here. All right. Alert here and an alert here. So I'll set the alerts. Basically, you just go to this. You'll set the alerts based on the price. Okay. I could set an alert for a long here, but the odds are that if price moves up here, that long is going to be gone by the time I have any time to get around to the computer. But I can set up alerts where trades might be taking a bit more time to develop, but I'm interested in getting behind them when they are in that particular area. So maybe I'll set an alert for when this breaks, okay, and then I'll set another alert for when price is down here, and that way I know, okay, all right, Bitcoin is down there, and now time to go pay attention. You could do this across all assets where you set alerts, you bracket price, and you could basically be updated as to what direction the price is moving in. Effective trend following strategies on the higher time frames. Honestly, adopt a simple moving average based strategy. So simple moving average based strategy. So whether it is on a daily, okay, or a 4-hour or a 6-hour, and if we looked at the 50, the 20, and the 100, these would have all been perfectly adequate on something like the daily chart for taking advantage of the majority of this trend, right? So just on if we want to just look at the 50, okay, and the 20, all right, you would have been in this entire trend, okay. Bit easier to say after the fact, but nevertheless, you would have been in this entire trend from basically down here, all right, to all the way up here, right? So it lags because it takes a while for this to close and display, but you would have captured a bulk of this trend. Moving average based strategy, all right, volatility stop, also very good, as I mentioned. Okay, you could use a moving average strategy on its own also without a crossover. Or for example, the 20 moving average is, again, a great moving average to use. That shows when buyers are control. Okay, so now I have it on right now. The red bars are when sellers are control, green are when buyers are control, and you could go based off this too. This just shows our relationship to the 20 period. Higher time frame, the better, right? Okay, so again now, remember, moving average is a lagger, so it's a lagging derivative, so you're going to have price move against you before you get the signal, okay? Or in the direction you're looking for it to move before you get the signal as well. So you're not going to get into the long right away. You're not going to get it out of the position right away either. All right, so how would you handle risk when on an exchange that uses only cryptocurrency as collateral? Okay, good question, because when you're on Bybit, you are still exposed to the spot underlying asset. So you're still essentially long Bitcoin, even though you're not in a trade on Bybit. So if you're not keen on taking a short, if you're not confident in taking a short, but you don't want to be long, you have to get into synthetic USD. So essentially, you're shorting your stack on 1 times leverage. So shorting the amount of money you're looking to protect, okay? In many cases, your entire account value. If you're trying to protect your entire account, if you're not in any trade, you'll put your entire account balance up, short it at 1 times leverage, and you'll basically lock it in to synthetic USD. And you'll only be exposed to the funding rate, but remember, this won't be based on the notional value of contracts anymore because you're just going to be trading on behalf of the actual capital you have. So it'll be a smaller amount. So that's how you get into synthetic USD. Okay, do you still journal? Absolutely. I don't think you have an option. If you want to succeed as a trader, you have to journal. It's just part of the process. And even if I don't feel the need to record every trade, I think that it's really important to maintain discipline from start to finish with your entire process and to continue to follow this framework moving forward. Do you still trade other markets like oil? Not currently. I came from trading equity derivatives and then oil and now Bitcoin. And I stuck in Bitcoin for a few reasons. Well, one, because it's volatile, okay? But two, because it's not very efficient. So it's not very efficient. It's just a technical driven asset, okay? It's not driven by fundamentals really, unless you want to call the whole use case for it and the whole growth of it based on fundamental reasons from 2008 on. I wouldn't go so far to say that. It grew in popularity from then, but it's a technically driven asset. It's entirely inefficient. It's retail driven. Um, so it's not a macro asset by any means. It's not there yet. Oil is. Oil is fundamentally and technically driven. Your competition is much more fierce when trading oil. Okay, that's the those are the big boys. Um, you have to have direct market access. Otherwise, you're going to be paying ridiculous spreads, and you're not going to be able to put up as much. Well, I mean, I wouldn't say that this is a benefit because more often than not, traders use leverage incorrectly in crypto. But with oil, you're going to have to put up the margin requirements are obviously not as flexible as with crypto. And I think that traders can benefit from focusing on one asset. And until Bitcoin stops moving, it's moving just enough for me. I get enough out of all my trades, and there are times when yes, it's not volatile, but I don't need to trade 24/7. If I'm trading most effectively, I actually don't need to. So I would say that when I'm trading most effectively, I don't need to trade full time at all. So even my personal trading, just because if I'm doing things well, I only have to place a few trades a month for them to really to make my month or my next few months, right? Just with regards to my own personal account. This has nothing to do with my business. So let's see. I think that's that. I'd appreciate if you could share some thoughts on how to use VPVR, excuse me. All right, so yeah, just to go over that real quick again. So look at this candle. That's cute. So I mentioned how I don't really have many things on my chart. I see traders with tons of stuff on their charts, and I kind of know right away. I mentioned how you can have multiple indicators and you can use them effectively in different styles, can yield the same results. But when I see a chart that has 55 different things on it, not 55, but you know what I mean, 10, 5, I just know that there are way too many signals that they're getting at once. You could suffer from something called multicollinearity, for example. Way too much feedback, way too much noise. I like to have clean charts, okay? There's only one thing that I'm concerned with, and with my TradingView chart, I'm primarily just using it to draw on, to mark up levels, because I'm primarily concerned with what goes on in the candle, okay, at certain levels between buyers and sellers, and you're not gonna. The indicator is not really going to show you that. It will show you what a trend is. It'll smooth it out, but as I mentioned before, I do have some of the standard stuff that's available. Okay, some of the more useful moving averages. All right. I will throw an RSI on there from time to time. I do leave my funding indicator on there. I will throw the historical volatility on or the ATR on. I don't keep these things on. I try to keep the chart as clutter-free as possible, just like my desk, just like my cars, just like my living environment, right? So your living environment should transcend or translate into your trading environment. So clean living, okay, clean surface, clean trading surface, right? It just helps me operate at a better level. And then with regards to volume profile, so I actually have this one available always. This is the point of control as it moved along. It's not actually showing me the volume profile right now. Let's show that. Okay, you can leave this on your chart if you want, and this will update based on what we're currently looking at. All right, so you'll see how this will adjust. Okay, this line right here is the developing point of control. All right, that is the point of control for the structure. Right, so the developing point of control and that are going to be the most recent portion of the developing point of control, and the point of control will always be the same. But I will leave actually just the point of control on, and the developing, actually rather just the value area on, designated by the differences in color. You can put on the developing value area. All right, this shows you where most of the trading took place. So if we think about a bell curve, as I said, this will be where your normal distribution would be. All right, your one standard deviation. All right, if it's within 68 point, I think 68.8 or 68.6 or 4%. Mine might be set to 70%, but just if we're looking at a range, what I'll do is, instead of actually leaving this larger one on that rotates in and out, or rather pops in and out depending on what I'm looking at, I will use the fixed range. I'll look at an entire session, or not, it doesn't have to be a session, rather the entire range, okay? Or I'll break it up within weeks. So I'll look at 1 week to the next, right, to look at certain rotations within that range. And then again, I have it set up so that the value area, or the area that has the most trading, okay, or in this case 70% of the trading volume took place in, designated by different candle color. So you can actually just go on here and choose that. Okay, and then the developing point of control, like I said, I leave that off. And the point of control I leave on. That's where the largest amount of trading volume took place. Okay, and then from here, what I'll do is, as I said, I'll map out the areas where the value area low and high were. Okay, so if you imagine that this is where a majority of the trading took place, okay, and you consider this like an auction, all right, so price sought out buyers, okay, sellers were interested in selling until they found the value area low, okay, all right, where price was below or where the asset was below normal value or what would be considered the value area. So what happens? Buyers usually step in, all right, because it is cheap, right? Because imagine if you're pricing an asset and you're dropping it in price. Okay, if you drop it in price after it's been high enough, eventually you'll drop it to a point where buyers will be interested again. So that'll be at the lower portion of the value area. So now price will meander throughout the structure again. Talked about how it'll interact with the higher volume nodes and based on structure. Not to get into that. That's for the trading workshop. But then price will auction up again. Okay, buyers are interested in buying until they're no longer interested in buying. Okay, and that'll be the top of the value area. So the top of the value area will be where we'll likely see buyers who become less interested in buying and sellers become more interested in selling. So for that reason, I'll map out these two areas. Okay, looking at the volume area high, okay, or value area high, value area low. The volume point of control, which is the area where there's the most density in terms of volume. Okay, where price the most volume occurred. All right, at what area, and then what you can do is you can map out the high volume areas. So you'll see that, for example, if I just put this on right here, I want to save this stuff for the trading workshop. So I'm not trying to blow through it, but just give you an idea. Okay, so the value area high, okay, value area low, and this was up until this point. So this was up until this point. So this was not for this over here, but you'll see how moving forward it was important. So again, point of control, I'll use a different color line for. Okay, and then for these nodes, all right, we use boxes. So if I just put a rectangle at these large nodes, large node right there, all right, this is the point of control up here. There's a large node here. Or if you include the point of control with that next large node that pops out up into that point, and then this large node down here. Okay, you can see that even though, for example, this volume profile only was mapped up until here, so that's the only area that included. If I delete this, you'll see that moving forward, these areas were significant still. Okay, so this gets into the whole auctioning process and why paying attention to these moving forward are important, especially when there's multiple confluence rather between a span of these, right? So when you have a structure when there are structures that have multiple points of control lining up, right? You can expect this to be an area where price would likely find either resistance when moving up or support when moving down. Same with the value area. But again, this is something that we're going to be talking about in depth on the actual trading workshop. I'm actually losing my voice right now. So let's see. Do we have anything else? I think that's that, guys. So just to answer a few of these questions, if you have any questions about some of the answers, all right, or if you need any more clarity, just let me know. Otherwise, I'll be putting up a post soon on the trading workshop. If you didn't already watch this video, I suggest you do. Victor had a great question, and I answered it and talked about a few different things in there. All right, guys. Talk to you soon.